Rent growth is evidence in markets past peak supply volumes. So the timing of these supply volumes is, according to RealPage, and I think according to common sense, the timing of these peaks in supply are really important. However, if I could summarize also
Please.
another big point in this, the magnitude of the supply is I would say more relevant than the timing of it. So you look at the ones where it has the percent of annual growth at peak in Salt Lake City, for instance. This is a market that has since peaked, but its percent of inventory was so big, it still kind of seems like it's still working through that because its rent growth is negative 2.3. Its current inventory growth is not 6.8%. I don't know what the numbers are. They don't have them on the RealPage is, but that was
at
past.
peak.
Yeah,
That was at peak.
So I do think that, like, as much as these markets are growing and working through, I just think a lot about how long does it take. That's why I was talking to Katrina, when the apartment moves in next door, maybe it impacts it 60 days beforehand. You're going to start thinking about adjusting rents, but maybe that impact is still felt as that apartment fills up and is still continuing to be a pressure. And it's just a new paradigm that you have to deal with. It's not like it's like fills up and now we can go back to what we were before. It's a never ending thing, especially if there are 3 apartments coming up.
Yeah, it's more competition in the market. Exactly. Just because it's absorbed doesn't mean that it just gets easier after that, because you're still competing for those renewals and there's still an alternative.
Yeah. And super interesting too. It's like, so Salt Lake City, I group it with a lot of like the hyper growth, not fair weather markets, but the ones that were really super popular in like 2021, where everyone was remote working to, and places that looked really nice.
Great employment growth. I mean, Salt Lake City's got a lot of solid fundamentals. Fundamentals.
Oh, for sure. But these largely do seem like markets that even before the pandemic they were really popular, like Portland and San Francisco. I remember San Francisco especially, it had low rent growth for a long time, and I think part of it is it's just not housing's not a really great proposition in that city.
It had rent growth for so long that made it was one of the most expensive markets in the country.
Yeah,
so it had so far to fall from. Because then all of a sudden, like, no one wanted to live in San Francisco. Very few people did. Everyone moved out, and you had a lot of apartments. People were still building apartments, but no one wanted to live in those apartments.
So if you go to the second, so that's that first group, and then the second, there's other groups where the supply peaked in 2024, so a little bit closer here. And you kind of still see, like, if you're there is a fairly strong correlation between how much of their inventory were they building at their peak. And if they're building a lot, then their rent growth is probably negative. If they were building a smaller amount during the peak, then their rent growth could be positive. Because we're still seeing, like, Las Vegas has negative rent growth, but their peak was only 2.4% of the supply. So it's not perfectly even, but it's definitely, like, noticeable. You see like Nashville adds 7.3 to supply. Well, right now it's still at negative 2.6 for rent growth.
And the other factor obviously is demand, and so we've seen a lot of strong demand, especially in the Sun Belt in the Midwest. But and again, I don't know this for sure, but one case could be that Las Vegas, even though that they had less inventory at the peak coming online, maybe just the demand has fallen off a little bit. They're again talking about recession fears. There's a lot of talk about folks not going to Vegas as much, not spending as much money.
What kind of economies in these places?
Yeah, that could have an impact. And West Palm Beach, that's an expensive market. But demand would be that other variable that we'd have to take into account.
And that's another thing that it's going to make this year and the coming years really interesting too. Is we've said it before. Is as supply recedes, all these other factors are going to become a lot more relevant. We've probably discussed before how, like, return to office may be favoring some of the tech markets as the workers come back to, and that's going to be something that probably to pay attention to. We'll also in this report on the Midwest, like, we look at what kind of employers are there, and what are the specific developments that are happening, and so it's not just supply, and also I think the size of the market, as I said before, is a good key for is it going to be particularly volatile or not.
Yeah.